Hey YouTube, this is the Robinhood Investor. Hope you had a great week of trading. As always, I really appreciate your support, so if you like this video, give it a thumbs up, and if you want to learn about investing, subscribe to this channel. Today I'm going to talk about my Robinhood portfolio, currently at $295,585, cash position of $1,467. I have another $30,000 in a savings account, high yield savings account, so that I can deploy into the market when there are opportunities to buy. Make sure you stick to the end of the video for the stocks that I'm buying. So first position is Ethereum, currently at $1,700. So this makes up 0.58% portfolio, or $1,701, up 166% on this position. I do have more in my Coinbase GDAX account just because I do have a long-term outlook on Ethereum and Bitcoin. Taking a look at some of my stock and equity positions. Vanguard S&P 500 ETF, ticker symbol VOO. This makes up 5.67% portfolio, or $16,671, up 52% on this position. So it's a great way to expose yourself to some of the largest U.S. companies. Next is Vanguard Information Technology ETF, which is great to expose yourself to technology companies in the U.S. This makes up 5.92% portfolio, or $17,399, up 170% on this position. I think with tech, it's very volatile, but long-term, there's a very high dependence on technology, as in pretty much every industry. Next is Apple, which is my largest stock position. They make a lot of consumer electronics like iPhone, Mac computers. They have wearable devices like Apple Watch and AirPods. And then they're also growing heavily in the services business with the iCloud, as well as Apple Music, Apple Arcade, Apple TV. This makes up 12.13% portfolio, or $35,673. I'm up almost 300% on this position. I think Apple is a very solid long-term hold. Also pays out a solid dividend, so it's a very high growth and dividend stock. Next is NVIDIA, which makes GPU chips. Also in the data center business. This makes up 8.89% portfolio, or $26,157, up 288% on this position. I think NVIDIA, there's a lot of potential upside with higher dependence on GPU chips. Next is Amazon, which surged last Friday. You can see up almost 12% at one point. This makes it 7.51% of my portfolio, or $22,090, up 28% on this position. I think with Amazon, it's very diversified with e-commerce as well as Amazon Web Services. And even though there was some negative sentiment with some of the other retailers like Walmart and Shopify, I think with Amazon, it's a little more diversified with exposure in cloud computing and Amazon Web Services. So even though Amazon is in e-commerce, there's also some exposure elsewhere. And recently they acquired One Medical, which is their attempt at taking their attempt at getting primary care with Amazon Health Care, as well as they also have pharmacy like PillPack, and then also they have virtual care as well. So Amazon is definitely making an impact in healthcare, and we'll see how they do with this recent acquisition. Next is Microsoft, which is in the enterprise solution space. Makes up 6.94% portfolio, or $20,420, up 212% on this position. So the thing about Microsoft, it's pretty good exposure to cloud computing and personal computing, as well as gaming. So also operating system like Windows and Office suites. So a lot of products under Microsoft, and I think it's a long-term hold, and they also pay a solid dividend. Alphabet Class A shares has voting rights, makes up 3.16% portfolio, or $9,285, 125% return so far. So Alphabet, majority of the revenue is in online advertising, and even though Alphabet and Facebook or Meta has pretty much dominates this business as a duopoly, I think Alphabet is better positioned just because their products such as Gmail, YouTube, Maps, all these other Google products, it does really well, and there isn't as much of a backlash compared to, say, Meta, Instagram, Facebook. There's just a lot more negative sentiment towards the Meta portfolio. Alphabet Class C share does not have voting rights. This makes up 2.52% portfolio, or $7,406. I'm up 118% on this position. Next is Visa, which is in payment processing. Makes up 4.68% portfolio, or $13,759. I'm up 80% on this position. Next is United Health, which is in the healthcare space, insuring, as well as their consulting. This makes up 3.5% portfolio, or $10,289, up 212% on this position. See, United Health has been it's been volatile overall, but this past year it's been doing really well. You can see long-term 5 years, it's doing very well. Johnson & Johnson, which is in the healthcare space as well. Consumer health, pharmaceutical devices, as well as medical devices. Makes up 3.44% portfolio, or $10,109, up 34% on this position. Johnson & Johnson doesn't have as much capital appreciation, but it has a dividend, so it's a pretty good dividend value stock. Next is Meta Platforms, which is an online advertising. Their products include Facebook, Instagram, WhatsApp, Oculus, virtual reality, and even though it took a significant dip, just a lot of negative sentiment towards Meta and Facebook and online ads. You can see it drop significantly right here. But I think hopefully virtual reality, it'll pick up in upcoming quarters, but in the short term, it'll take a hit. There's also an acquisition that was in question recently. There's some there's some negative news around Meta, but I think long term it'll do well as a growth stock. McDonald's is a restaurant chain. Actually, most of the revenue comes from real estate, surprisingly, but they do have pretty good growth in the long term, and they do pay a solid dividend yield. This makes up 2.69% portfolio, or $7,901, up 63% on this position. Taiwan Semiconductor Manufacturing Company, TSM. They make a lot of different chips, outsourced by different companies. Makes up 2.67% portfolio, or $7,866. I'm up almost 4% on this position. Go TSM. You'll see it took a significant dip starting in 2022, but I think long term it'll pick back up. Costco, which is in the membership warehouse retail space, makes up 2.58% portfolio, or $7,574, up 116% on this position. Costco continues to do well in retail space as well, just because they continue to have a recurring monthly revenue from their membership business, and I think the retention is pretty solid, just because when people shop with Costco, they buy in bulk, and it's also relatively cheaper when they buy in bulk. Next is Tencent, which is an online technology company based in China, which focuses on services like social media, gaming, as well as financial services. Makes up 2.55% portfolio, or $7,490, down 20% on this position. I do plan to continue to hold long term, just because I think with China growing with there's just a lot of growth in that market, and even though there's a lot of negative sentiment around emerging market and Chinese stocks, I think Tencent long term will pick back up. Mercado Libre, which is an e-commerce based in Latin America, so that includes Mexico, what else? Argentina, Brazil. Makes up 2.21% portfolio, or $6,492, down 26% on this position. Next is Alibaba. So it also took a significant dip, just like Tencent, but long term I do plan to continue to hold. Makes up 2.14% portfolio, or $6,296, down 48% on this position. Next is Berkshire Hathaway, which is a holding company owned by Warren Buffett. Makes up 1.94% portfolio, or $5,705, up 58% on this position. So Berkshire Hathaway owns companies like Apple, Bank of America, American Express, Kraft Heinz, a lot of different large companies owned by Berkshire Hathaway. And they're very diversified too. I wish they paid a dividend yield, but the thing about Warren Buffett is that he believes in reinvesting all that back into its companies rather than paying it to shareholders. Home Depot, which is in the home improvement space, makes up 1.92% portfolio, or $5,635, up 92% on this position. Boeing, which is in the aerospace industry, this makes up 1.62% portfolio, or $4,770, down 29% on this position. So Boeing has been very volatile in the past couple years, but I think Boeing will pick back up eventually. I don't plan to liquidate this position anytime soon, but we'll see how it does. PayPal, which is in the payment processing fintech space, they have companies like Venmo as well as PayPal. So this makes up 1.6% portfolio, or $4,711, down 23% on this position. Next is CrowdStrike Holdings, which is in the cybersecurity space. Makes up 1.39% portfolio, or $4,097, up 20% on this position. Next is Disney, entertainment company, which has parks, and they also have a direct-to-consumer Disney Plus platform, which I think has a lot more potential upside. Makes up 1.27% portfolio, or $3,749, down 4% on this position. I think Disney is better positioned than Netflix just because of the intellectual property and all the parks. But yeah, there's a lot of growth from Disney Plus that I think will pick up in the future. Shopify, which is an e-commerce company. If you want to have your business online, Shopify is great solution for small, medium, and large businesses. Makes up 1.27% portfolio, or $3,736, down 60% on this position. And Shopify was affected with some recent layoffs, and their CEO announced that, unfortunately, but I think it's oversold at this point, so I might buy some more Shopify. AT&T, which is in the communication services space, makes up 1.18% portfolio, or $3,483, down 46% on this position. I might liquidate some of my AT&T stocks just because there isn't much. I don't think there's much growth, and they also cut their dividends. So long term, I think there's other opportunities that I can reinvest in. Block, or the parent company, is Square, in the payment processing space, as well as blockchain technology. Makes up 1.19% portfolio, or $3,507, down 54% on this position. I think Block has been very volatile, but I do plan to continue to add more to my portfolio. Next is Adobe, which has a lot of solutions in the creative space. Makes up 1.14% portfolio, or $3,349, down 14% on this position. I think Adobe, even though they took a dip, but it'll pick back up just because it's one of the largest solutions for creativity. And with things becoming more digitized, I think Adobe will benefit from that. Next is NextEra Energy, which is in the energy sector. Makes up 1% portfolio, or $3,041, up 92% on this position. Next is the Trade Desk, which is in the online advertising space. The Trade Desk is also affected by the industry, just like Google and Facebook. The addressable market for online ads is becoming smaller just because of all the recent uncertainty. This makes up 0.46% portfolio, or $1,345, up 27% on this position. I do plan to continue holding the trade desk for the long term. Next is Twilio, which is in the communication services space, using web services. Makes up 0.35% portfolio, or $1,033, down 64% on this position. Next is Teladoc Health, which is in telehealth space. Makes up 0.3% portfolio, or $9,908, down 60% on this position. So even though it's very volatile, and you can see this is becoming a very saturated space with all the big tech companies getting into healthcare, I might liquidate my Teladoc position, but we'll see how it does in upcoming earnings. Next is Baozun, which is a Shopify of China. This makes up 0.36% portfolio, or $1,064, down 74% on this position. Similar to Alibaba and Tencent, I will plan to continue holding long term, but don't plan to sell. That's all for this video. What are your thoughts on these positions? Comment down below. Remember to use our follow links below, and both of us get $20 for using personal capital or free stock for using Robinhood. See you in the next video.